For the final trade of the day, let's check in with Mike Patton, the head trader at Funder Trading. Mike, what stocks can you steer us toward this week?
Well, I actually have two stocks I'm looking at. They're related, Uber and Lyft. So you probably know both of these companies, they're rideshare applications. And Uber is the more popular. So I'll go over that one first. Symbol is UBER. Now, Uber right now, they had earnings recently. And since the earnings came out on the 5th, we've seen the price go up substantially. At first, it didn't. It actually came down at first. But it looked like a really great opportunity because when you look at the fundamentals for Uber, right now their valuation, their price point is very low when you compare it to the actual metrics they're cranking out now in terms of profitability. Also, we're seeing some institutional buying activity coming in, and I expect that as these filings come in, because it does take a little while for larger institutions to file their reports about how many shares they purchase, et cetera, we'll see some more trickle in as we go through the next week or so. So I do expect to see a lot more institutional buying. And right now, looking at the overall buying pressure, like looking at the money flow, it's pretty obvious there's a lot of buy orders that have been coming in recently over the last 5 days at least. So we know that some big buyers are coming in, but it's only later that we'll find out exactly who they are and what they're doing. So it looks like right now, if we just look at Uber, at the moment, it's actually trading just a little bit below the lowest price point that I think would be reasonable, which is about $76 a share. But realistically, I think the stock should be at $90 a share or higher, and that should be in the near term. So at least within the next 3 to 6 months, I think we can easily see it get close to that number. But in the event that it's not working out, we have to look at the risk. I personally see the risk down to about $60 a share. If the stock is not able to sustain itself above that price, that would be strong evidence that weakness is there. But we do have a lot of potential upside. So it looks like that one is a pretty good opportunity. Now, as far as Lyft, the question with Lyft is Uber just had decent earnings. Lyft has earnings in 4 days. My guess is that Lyft is probably going to have comparably positive results. So I recommend everyone keep an eye on Lyft over the next when they have earnings on Tuesday, February 11th. They'll be after market. So after that, we'll see what the numbers say. But Lyft has yet to achieve profitability, unlike Uber. But when Uber finally achieved profitability, as is typical for a stock, they suddenly exploded in price. Lyft is right on the cusp. I mean, literally, it could go profitable this year for the first time ever. So if that happens, then I think that's going to put a lot of faith in the company. People are going to see some significant upside potential. So looking at that one right now, it's currently trading around $14 a share, $14.50 a share. I would definitely wait till after earnings, but if the earnings come out well, we could easily see Lyft moving up to prices above $19 to $20 a share, possibly a lot more. The highest estimate looks like it's around $26. So if the earnings come out really well, we actually may see prices move eventually into the mid-20s. So we'll see.
You're not alone in this trade. Billionaire investor Bill Ackman is taking a $2 billion stake in Uber. Thank you, Mike.
Absolutely.